me my fans. Can you please show me some forgiveness? I was wrong. The dog was wrong. I bend my knee to you. I am your supplicant, Amit Gugreja, Tom Nash, Fat Money. Forgive me. You are the true goats of finance.
Ooh, I got a little bit of a headache doing that. All right, so welcome back to the Dong Report. We're going to cover some earnings today. I ate a lot of lasagna. Woo. Oh my God, I ate a lot of lasagna. I overate. I think Fat Money would know about that. Anyway, we're going to cover some earnings today. We're going to cover my favorite company of all time, Palantir. We're going to cover HIMS, and we're going to cover Navitas. Now, you may be asking, what is Navitas, strong man? Navitas is a company that was just pumped by one of my favorite grifters, Charlie Boy. And of course, the stock is down 13%, but he said it's a long-term investment, so I guess we can forgive him, right? So let's dive right into the earnings. Welcome back to the Dong Report. All right, so first and foremost, let's go check out Palantir. So Palantir is up 4% on the day, and it's up 3 and some change in the after hours, which indicates that they had a kind of a positive earnings. So let's compare that to VT, because we always got to compare everything to VT. And remember, if your stock goes up more than VT, that delegitimizes VT. So VT, of course, is only up 1.4% today, which is still pretty impressive, but not as good as Palantir. All right, so let's go back to Palantir, and then let's read the earnings. So Palantir, let's make sure we're sharing. I'm always paranoid about sharing. Palantir Technologies today announced financial results for the second quarter ended June 30th, 2025. This was a phenomenal quarter. We continue to see astonishing impact of AI leverage. Fluffing that AI now, aren't you? Our Rule of 40 score was 94%, once again obliterating that metric, just like you obliterated Amit's back end. Year-over-year growth in our U.S. business surged to 68%. I mean, good numbers. I'm not going to lie. Oh, it's horrible. And year-over-year growth in U.S. commercial climbed to 93%. We are guiding to the highest sequential quarterly revenue growth in our company's history, representing 50% year-over-year growth. Okay, so right off the get-go, we see some very positive guides. I'm sorry, I'm sweating my you-know-what off. We see some very positive guides. So right now, I'll admit, Palantir is doing absolutely fantastic. And of course, how much is the stock up year to date? So year to date, stock's up 112%. Over the past year, it's up 549%. Okay. And then over the past 5 years, it's up 2,116%. So obviously, if you had bought Palantir, at any price, you would have had astronomical returns, especially because it's at all-time highs. But the question is it going to continue forever? And it is a bubble. Is it a bubble? I don't know. Let's keep reading. All right, so that was Alex Karp. U.S. revenue grew 68% year over year and 17% quarter over quarter to $733 million. So basically, AI is all the rage. Palantir helps companies cut costs, and they use AI to do that, and they're so amazing. So of course, in a era of like AI hype, euphoria, and a boom, everybody's going to invest in a company that is kind of at the center, or is at least perceived to be the center of AI. And Palantir also has the amazing benefit of having very fantastic past performance. So when the average retail investor sees this, they say, holy crap, 549% in 1 year. And you compare that to like QQQ, VTI, absolute annihilation of the indices. So what happens is you kind of get this bubble effect where people look at the past performance, they buy because of the past performance, that shoots the stock up higher. Then people see the stock goes up higher, and more 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 people buy in. And you get this effect where you get to like extreme valuations. And we're going to look at the valuations. And are they justified? Any valuation can be justified. Any valuation. I mean, remember Tesla when it was growing precipitously in 2020, 2021? The valuation kind of made sense because they had 50% revenue growth. They were the leader in their market. There was no competition. And, Tesla was all the rage. And then eventually, Tesla hit a plateau. The growth massively slowed down. And you saw at least a collapse in the fundamentals of Tesla, but the stock obviously hasn't. And this is entirely possible with Palantir. But when we're currently in this AI phase, which it's just heating up. Hold on a minute. Let's go look at NVIDIA real quick. So you saw Meta, you saw Microsoft all post amazing earnings. NVIDIA is a beneficiary because they're guiding for a bunch of CapEx, which means they're going to buy NVIDIA chips. So while this continues to happen, you could continue to see growth in all of these stocks, including Palantir, because AI is all the rage and it's hot right now until it isn't. All right, let's go back. U.S. commercial revenue grew 93% and 20% quarter over quarter. U.S. government revenue grew 53%. Oh, little Daddy Trump's rewarding his little fluffer there now, isn't he? And 14% quarter over quarter. Revenue grew 48% year over year and 14% quarter. Okay, so they're posting fantastic numbers. Close 157 deals of at least $1 million, 66 deals of at least $5 million, and 42 deals of at least $10 million. Closed a record-setting $2.27 billion of total contract value, up 140%. So basically, you're just seeing fantastic customer growth, up 43%. Operating income, $269 million. What does that matter, though? And then adjusted income of $464 million, blah, 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 blah. So I really can't say anything bad about the numbers, obviously. Let's see the guide. So for Q3 2025, we expect revenue between 1.03 to 1.087 billion and adjusted income from operations of 493 to 497 million. So they're guiding for revenue growth and increased profitability from adjusted income from operations. And they're raising their full year 2025 revenue guidance to between 4.1 to 4.1 billion. Blah, 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 blah. Let's see. We raised our adjusted free cash flow guidance to between 1.8 to 2 billion. So the earnings were obviously fantastic. Now, of course, the issue, as always, with Palantir is the valuation, as we're going to look at in a second. And I know you clowns are going to come in here and say, but you just don't understand, strongman. You just don't understand that valuation doesn't matter. It actually does, because it represents the market's expectations for the future growth of the company. And you have to ask yourself, okay, the numbers look good now, but is this sustainable perpetually into the future? And the valuations that I'm seeing, I'm getting major, insane bubble indicators. And you'll see in a second. So if we break down the income statement, so obviously profits are exploding. They grew sales and marketing expenses by about almost $50 million. What is this in thousands? Yep. They grew R&D by about 20-something million, and they grew general and admin by roughly 20-something million. So you see growth in expenses on every line item of operating expenses. That could be partially actual spending of the company, and it could be stock-based compensation, because a lot of that feeds in to the different line items depending on who works. Like if you have somebody that works in sales and marketing, you're going to have that stock-based compensation expense, which is a non-cash expense, is going to be reflected in the income statement under sales and marketing. Income from operations, $269 million. Interest income, $56 million. So they're finally at the point where their income from operations has outgrown their interest income. And they're going to have high interest income for a long time, because one thing that Palantir has going for it is it has a fortress balance sheet. That company will, I don't know, they would have to be like total incompetent, grossly incompetent, fraudulent pieces of garbage to mess this up, because they have a fortress balance sheet. They're just sitting on a ton of cash. What they're doing with it, I'm not quite sure. Maybe we'll see in the statement of cash flows, but they've been sitting on a ton of cash. And then, of course, net income has almost tripled. So here's where things get very interesting, okay? Earnings per share attributable to common stockholders diluted 13 cents. Okay, so you have one share of Palantir. Let's see. One share of Palantir is $166. So you pay $166 and you get 13 cents in a quarter. You give me $166 and I'll give you 13 cents. And, maybe I'll give you 15 next quarter. And maybe I'll give you the 20 cents the quarter after that. And maybe I'll give you 25 cents the quarter after that. But you got to sit there and really think. What are you paying for what you expect to get into the future? And getting 13 cents in the most recent quarter for a stock that's trading at $166, I don't know. That seems a little extreme to me. But you really can't convince anybody. Like, you can talk about valuation all day. It doesn't matter. The only thing that people see is this return. That's all they see. They don't think of, is there a risk that I'm potentially overpaying for future profits? Now, in the past, Palantir absolutely collapsed. Absolutely collapsed. And a lot of people capitulated. And if you had actually held the whole time, which I doubt a lot of you did, then I'll give you some credit. If you truly saw the long-term vision, I will give you credit. I don't think most people did that, to be perfectly honest. So, all right, let's keep looking. So 13 cents per share at $166 a stock. All right, so they have stock-based compensation breakdown. Actually, not a crazy growth in the amount of stock-based compensation. All right, here's their balance sheet. This is like, what are they doing with this cash? What are they doing? If they go bankrupt, I would be shocked. All right, so they have almost $1 billion in cash, and they have $5 billion in marketable securities. That's treasuries. And right now, treasuries are super high yield relative to the last couple of years. So, of course, they're going to print that interest income that's going to hit their income statement. Accounts receivables up about 50%. Let's see. Property, plant, equipment, no major growth. Leases up slightly. Let's look at debt. Let's look at long-term debt. Deferred revenue, non-current, up about 10%. Okay. Customer deposits, non-current, down. Interesting. Let's see. Common stock up a little bit. Additional paid-in capital up pretty significantly, actually. Let's see. Accumulated deficit. Oh, they're you know what, guys? They've only cumulatively lost $4.6 billion in the entire history of their company. Okay. So let's look at the statement of cash flows. Okay, stock-based compensation was $315 million. Non-cash consideration. Not sure what that is. Okay, so net cash from operations has grown from $273 million to $849 million. Okay, now when it comes to their financing activity, so they actually repurchased they spent $36 million buying back stock. $36 million buying back stock. And I bet you that costs a fortune. Now, these repurchases of common stock, this is the cost of stock-based compensation. Because what happens is they issue all these stock options. All the employees cash them in because why wouldn't they at this point? And the company, in order to keep the shares outstanding from absolutely exploding, has to buy back the stock. So it's not necessarily counted in free cash flow per share, but it actually is an additional cost because if they didn't buy back that stock, then the shares outstanding would grow precipitously. So it makes you wonder, how many shares of stock did they buy back for $36 million and how much should they pay per share, which is probably a lot. So let's see. Okay, so overall, I can't fault the earnings, but like I said, I'll beat a dead horse over and over and over again. But in times of euphoria, stocks can go anywhere. They can go anywhere. Go look at AMC. Now, I'm not saying Palantir is AMC, but every time a stock goes up, there's this massive rush of euphoria, and then it builds and it builds and it builds. But a lot of the times, stocks get ahead of themselves. And once again, I'm not saying Palantir is AMC for all you shills out there, but I suspect that Palantir has a lot of euphoria baked into it. So let's go look at some metrics here. Now, the most hilarious thing is the price to sales. It just keeps going up. There's no bubble behavior here, strong man. You're just a fool and a clown. You're paying, and yes, I know the stock went up. I get it. You're paying $117 for $1 of revenue. Let me say that again. You're paying $117 for $1 of revenue. A company that is this expensive needs to be growing at astronomical to the 20th billionth power rates to even justify that. And if you're paying that price and suddenly the growth peters out, like let's say the AI boom ends, whenever that's going to frickin' happen, if it ever does, you're going to get annihilated. Most of Palantir's growth has been from valuation, which is just a guess about the future. Price to free cash flow, $287 for $1 of trailing free cash flow. $219 for $1 of operating cash flow. The amount of expectations that are priced into this stock is absolutely insane. I don't think a stock has ever been this richly valued. I'm serious. That should terrify you. But hey, your stock went up. Now, will I admit defeat on Palantir? Absolutely not will I admit defeat about Palantir. Never. Just like I don't capitulate about Tesla, just like I don't capitulate about VT, and just like I don't capitulate about Bitcoin. I have my convictions and I'll stick to them. And I don't think because the stock went up that I'm wrong. Because there's been many times when I've said, oh, that's a bubble. Oh, that's clown market. Oh, that's garbage. And people laughed at me and they called me a moron and a loser. And I was looking at, for example, Tesla, and I said, okay, it's growing fast, I see. But what if the growth slows down? What about this? What about that? And guess what? I was right. Bitcoin. Everybody was loving Bitcoin when it was going up in 2021, 2022. And I said, you know, Bitcoin is fundamentally worthless and has no intrinsic value. And the second that Bitcoin starts to fall, people are going to capitulate because you can't find a bottom. I was right about that. AMC, Tattooed Chef, all of that nonsense. You know how much I got mocked in 2020 and 2021 when I called what we were seeing the clown market? And all your little bussy boys that you were following, they were pumping every freaking stock they could. Because when bull markets are out there, retail floods in and they feed you the poison that keeps you coming back to their channels. Because they want the ad revenue and they don't care about giving their honest opinions. They just want to bring you in. And what a lot of these grifters did, Tom Nash, is they pumped a bunch of stocks and a lot of them collapsed. Some of them went bankrupt, Jeremy. And what did you guys do? You capitulated. You gave up. And the grifters deleted the videos of the stocks that did well. Or did bad, excuse me. And what did you guys do when we got another bull market? Now you're worshiping the grifters again. You're worshiping them again. And it's sad. It is actually sad that Palantir has done so well. I don't hate the company necessarily. I don't have anything against the company necessarily. Like, it's evil. What I don't like is how you morons have totally bought in to these frauds that have been pumping this stock since the get-go, not understanding that the reason they pumped the stock was because it was popular, because it got them views. And now that the stock has just gone to these insane valuations, absolutely astronomical, mind-boggling value. I mean, I can't even explain to you $117 for $1 of sales. For sales. It's insane. Now these grifters look like geniuses. Never mind that they deleted all the videos of the stocks that did bad. Doesn't matter. That's what upsets me about Palantir. It makes me upset. I don't like it because I don't like to see frauds legitimized. I think it's a terrible thing for you, not for me. You think I care? At the end of the day, I mean, my VT is going up too. Oh, not as fast as Palantir. But I feel bad for a lot of you that are really like, because these people pump Palantir and it went up a lot, now you think they're smart and they should be listened to. And that's extremely unfortunate because when the next bear market comes, which it could, it will, it'll happen. I think a lot of you are going to get absolutely annihilated. And I think that's unfortunate. That's my beef with Palantir. That's my beef with Tesla, with Bitcoin. It's all nonsense. But at this point, you made up your mind. Palantir is going to $1 trillion. What's the freaking market cap? It's all valuated. It's freaking crazy, man. 379 billion. And that's before the earnings. I don't know what else to say. All right, let's move on to HIMS. HIMS. Uh-oh. HIMS is down 13%. 13%. What happened? Well, let's check out the earnings here. So they had revenue. Are we still sharing? Yes, we are. All right. Revenue of $544 million, up 73% year over year. Net income of $42 million. Subscribers grew to over 2.4 million, up 31%. And affirms full year revenue growth guidance of 2.3 billion to 2.4 billion and adjusted EBITDA guidance of 295 million to 335 million. So the stock's selling off. I wonder if it was just something that happened on the conference call, but they're posting pretty good numbers. So subscribers year over year are up 31%. Monthly online revenue per average subscriber is up 30%. Online revenue is up 75% and wholesale revenue is down 10% for total revenue growth of 73%. It's a lot better than Palantir. Why is it selling off? Gross margin was 76% compared to 81% for the second quarter. Okay, so gross margin is contracted a little bit, but that's still a very solid gross margin. Net income was $42 million compared to $13 million. So we've seen more than a quadrupling of net income. Adjusted EBITDA, or almost a quadruple. Adjusted EBITDA was $82 million. Total nonsense. Net cash used in operations was $19 million. They used cash. Their cash flow negative. What happened? And free cash flow was negative $69 million for the second quarter compared to $46 million. What happened with the cash flow? All right. Here's their guidance. For the third quarter of 2025, we expect revenue of $570 to $590 million. So if we go look at the quarterly revenue from prior Q3 2025. So last Q3, they posted $401 million of revenue. And now they're guiding up to 590. So if you take 590 divided by, that's a big ass calculator, 401, they're guiding for 47% revenue growth. Pretty good at the high end. For the full year 2025, we expect revenue of 2.3 billion to 2.4 billion. So on the high end, if you look at their revenue, so for fiscal year 2024, it's 1.477 compared to 2.4. So 2.4 divided by 147. They're guiding for 63% growth year over year annual revenue. Pretty impressive. And adjusted EBITDA, total nonsense. All right, let's look at the financial statements. So, wow. So their cash balance has absolutely exploded in the last 6 months. They had 220 million of cash, and now they have 1.1 billion of cash. Short-term investments dropped a little bit from 79 million to 20 million. Inventory has a huge increase in inventory. I wonder if that's somehow related to tariffs. I don't freaking know. But that's a huge jump in inventory. That's a big jump in inventory. It could be because they anticipate sales in the future, a lot of sales in the future, or maybe they're front loading, or maybe the year prior was an aberration. But that's like, wow, why is your inventory piling up like that? Let's see. Goodwill is up a little bit, so they made a little bit of an acquisition. Property, equipment, and software. In the last 6 months, they have piled $117 million in a property, plant, and equipment. Their PP&E has more than doubled. Almost tripled. Intangible assets down a little bit. That's amortization. Leases have gone up by almost 7x. Let's see. Convertible senior notes. Okay, so they packed on almost, that's where the money came from. They borrowed almost $1 billion of convertible debt. Interesting. I guess they used some of that to buy property, plant, and equipment, and then the rest they just kept in the cash. Okay. Margins. Let's see. So we know their gross margin, or the gross margin was 76%, a slight drop from the prior year. Marketing expenses has gone up from 144 million to 217 million. That's pretty big growth. They're advertising their PP pills. Operations and support is up 50%. Technology development is more than doubled. General and admin is up by over 50%. Income from operations has grown by a lot, 242%. Okay. And then net income has more than tripled. So their earnings are growing extremely fast, or at least they did historically. And then, of course, their shares have increased by about, let's see, the shares outstanding by about 5%. So not crazy share growth. Diluted, though. How much is diluted shares outstanding? That's probably because of the convertible debt. 9%. So what is that debt being used for? Let's see the statement of cash flows. So stock-based compensation's up about 50%. Okay, well, they got a $10 million boost to their earnings from a benefit for deferred taxes. So that definitely pumped their earnings a little bit. Could have been because of the change in the tax law. Let's see. Yeah, they piled a bunch of money into inventory. I wonder if that was tariff related. They pumped a bunch of money into inventory. And they prepaid a bunch of expenses too. I wonder what drove that. That's interesting. They spent $101 million purchasing property, plant, and equipment. They generated $970 million from issuing debt. Purchases of capped calls related to convert. Okay, I guess they bought options against their notes. Not sure what that was for. And what the hell are they using the debt for? So they borrowed almost $1 billion and they spent $80 million on buying property, plant, and equipment. Maybe they have other plans for the money. I don't freaking know, but that's a lot of debt for, I'm not sure. Interesting. So that's HIMS. I don't know why the stock is selling off. Let's see. Was it the guidance, bro? HIMS and HERS sees an exciting period of growth, but the stock falls. Okay, a revenue miss. It's so random. Like, anybody that plays earnings, you're a clown. Okay? Never play earnings. The most inconsequential random crap causes the stock to sell off. Okay, it's very hard. Don't ever play earnings unless you're a freaking clown. So HIMS is still up 260% in the past year, up 161% year to date, and up 509% in the last 5 years. So doing pretty good. Forward PE of 63, which that seems a lot more reasonable for their growth compared to other companies we talked about. Let's look at valuations. Let's see. Price to sales of only 7. Okay. You know what? I could see it. Makes a lot more sense than other companies. Well, bro, it went up, bro. Price to free cash flow of 57. Price to opera. Okay. So, I mean, like I said, these are high, obviously like more expensive, but the company is growing pretty quickly. So you don't just always have to necessarily, it's price to operating cash flow needs to be below 10 or I'm not buying it. That's kind of priced in. Okay. But on the surface, it seems a lot more reasonable depending on how it continues to perform in the future. This seems a lot less bubbly. Okay, and last but not least, we got to talk about Navitas. Feliz Navitas. Feliz Navitas. So the only reason I'm covering this stupid stock is because I was watching that guy, Charlie. What's his name? Charlie Chaplin, whatever stupid name. Zip Trader. And of course, Navitas, semiconductors, NVIDIA, somehow related to NVIDIA. NVIDIA is working with them or something. Oh, the stock's getting news. Time to pump the stock. Well, let's see how Navitas did. Navitas. Down 17%. Buy the stock, bro! Buy the stock, bro! Down 17%. And I guarantee you, most people are selling it now. All right, they delivered revenue of $14 million. How does that compare? Okay, so total revenue was $14.5 million compared to $20 million in the second quarter. Huge drop in revenue. Loss from operations was $21 million. They generated $14 million of revenue and they lost $21 million for operations. That's over negative 100%. Oh my God. Cash and cash equivalents grew 161%. I wonder if that was from stock issuance. All right. Did they mention NVIDIA here? Okay, here we go. NVIDIA selected Navitas for development collaboration to support next-gen 800V data centers. Oh, they're collaborating. Buy the stock. Opportunity leveraging Navitas' full portfolio of GaN and SiC across 3 power conversation stages. 3 power conversation? Is that a typo? Not quite sure. Near-term business outlook. Third quarter revenues are expected to be $10 million. Okay, so they had $20 million last quarter year over year. They just posted $14.5 million, and now they're saying third quarter revenues $10 million. This sounds like a highly cyclical stock. God. When you have a collapse in revenue like that, that's a cyclical thing. That's kind of like Robinhood or Coinbase, basically. Okay, let's look at do they have their financial statements on here? God. Okay, everything's down. R&D spending's down. General and admin is down. Amortization is down. Loss from operations is astronomical, over negative 100%. Dividend income is down, over 50% almost. Loss per share, 25 cents. And what's the value of this stock? A $6.66 stock, and the loss per share is 25 cents. Shares have grown by 8%. Let's see. All right, I'm not doing these reconciliation fake earnings nonsense. Oh, they don't have their statement of cash flows? That's lame. See if there's anything crazy on their balance sheet. Okay, they raised a bunch of cash. I wonder if that was from share issuance. Inventories are flat, like your mom. Goodwill's flat. What else do they do? Earn out liability. What the heck is that? That's up 3x. I don't. Okay, I guess because they're collaborating with NVIDIA. That's why this stuff. Oh, they're collaborating with NVIDIA. Good job there, Charlie Chaplin. But hey, it's a long-term investment, bro. So you just got to hold it, right? With those kind of numbers, I don't like it. All right. So that's that. Let's do some comments. Let's see all the shills in the comments. Bro, my stock went up. I'm such a genius. All right. And I'm only doing members, so you can blow me. You want me to pull up your comments? You got to pay me $4.99 a month. My life is on pause at 3 p.m. You're on the West Coast, I can see. Will we see a 3 to 4x on American Eagle outlet? I have no. I mean, Sydney Sweeney. That's the Sydney Sweeney's hot. So buy American Eagle. Sounds like the honest company. Make yourself a dang quesadilla. Trader Joe's ran out of quesadillas. In what world does a 3 to 4 billion in revenue company equals a 400 billion market cap? Costco is 360 billion market cap on 245 billion of revenue. Look, Palantir has blown beyond, like, I don't, as a single company, ever traded at that valuation. Serious. I seriously want to know. Let me go look real quick. Highest price to sales during the .com bubble. Let's see. Okay, hold on a minute. What were the price? Okay. What were the price to sale ratio of popular stocks at the peak of the .com bubble? This will be interesting to see. Let's read this. Thank you for your excellent comment, stepsis. Okay, so Microsoft was trading at a price to sales of maybe about 80 during the .com bubble. Look, dude, this is so easy to see what's going on here. Look at that line. Bro, it's the future, bro. I'm a genius, bro. Okay. Cisco went up to a price to sales of, get out of here, 81. Oh, hold on. I was looking at the wrong place. Hold on. Yeah, Microsoft's highest price to sales was 59. And then Cisco's went to 81. Look at that collapse, dude. Look at that collapse. S&P went down by 49%. Top to top was from March 2000 to July 2007. It took 7.3 years to get back to where they were before. All right, so highest price to sales, Juniper Networks, 248. And you don't think Palantir could go? Oh, it could. Oh, it could go beyond. This is just historical numbers. This is just historical numbers. Stocks in a bubble can go anywhere. Look at Bitcoin. Look at Bitcoin. Look where it's going, and it's literally worthless. So Juniper Networks, 248. VeriSign, 226. eBay, 171. Just astronomical freaking numbers. Key takeaway, avoid buying into companies when their price to sale ratio is higher than 18x. The only way that's done, you have to I can't even imagine what the market's pricing in for earnings growth. I wonder if stock analysis does that for Palantir. Because I know they have let's see, forecast. Okay. Somebody's got a 21 price target. I mean, it's possible. Let's see. So they're projecting a massive EPS growth in 2025, and then 26% in 2026, 35% in 2027. So in 2027, they're saying the revenue is going to be $6.78 billion, 30% revenue growth. And remember, Microsoft and Meta were posting pretty damn good revenue growths themselves, and they're way more profitable. God. Okay. Yeah, so the average revenue forecast is 30% for 2026 and 30% for 2027. And then EPS. Yeah, I mean, I don't get it. I don't understand it. Oh, wait, I do. It's called being a bubble. But it went up, bro. So that's the answer. So, dude, if you looked at some of those price to sales, oh, yeah, Palantir could keep going. Palantir's price to sales is 130. NVIDIA's 37. Apple is 8. Amazon's 4. What a... Oh, this is worse in some aspects than 2021. It's bad. It's really freaking bad. I don't know when it stops. Did Jay Nagy die? Good question. Nah, he's fine. I talked to him recently. My in-laws make more money than my wife and I. They always have newer cars, the rollover negative equity to get a new car, always wearing flashy stuff, like anyone know who will listen. At family events, how much money they make. Great thing happened this weekend. The same in-laws called me to borrow money this weekend. I said, sorry, bro, sell some of your toys. Most Americans live above their means. They always talk about money made and never talk about the money they saved. End of story. Stepsis, I have understood that my entire adult life. Everything is fake. Everything is fake, and everything is fake. Most Americans, they will brag on the internet. They'll say that they're rich and they're making so much money. If you actually saw their financials, like their personal financial statements, disaster. You look at the average, I mean, the Federal Reserve tracks these statistics. Let's see. What is the average? What is the median net worth by age in the United States? And I get laughed at because I have VT. Okay, so this was AI generated, but I guess we could trust it because it's AI. AI would never lie to us. So under 35, I'm 35 right now. Median net worth, $39,000. 35 to 44, $135,000. Strong man. Jeremy's a millionaire and you're not, so you're poor. 45 to 54, 246. And you know what? Most of this is home equity. Most of this is not stocks. This is all, I bet you 80% of this is home equity. Fake net worth. Median net worth, 364 for 55 to 64. From 65 to 74, 410,000. Equity, home equity. And 75 plus, because you start to spend your savings, 334,000. Americans are brokies. And if you're a millionaire because of your house, you're not wealthy. You have to convert that into cash. Now, if you have a huge expensive house and you sell it and you have like $1.5 million, and then you buy a house for $400,000, well, you got 1.1 million in liquidity. Now you actually have some money to live off of. But if your house goes up in value, that does not mean you're rich because you can't access it. It's locked away. So no, most Americans are poor. Everything's fake. Everything is fake. I have known this for decades. And that's why I see all these clowns like Jeremy. They're all fake. Everything is fake. The stock went down, bro. That's bad. Well, I don't know if you're talking about HIMS or Navitas. HIMS, they're doing good. You know, whatever. HIMS is doing pretty good. Navitas, I don't know what's going on there. Does a nicotine not give you anxiety? You take it even before meals. The number one rule is to eat before. No, I am constantly nicotined out. Okay. And you know what helps with anxiety? Exercise. I just went for a nice, beautiful run. I think it was sunny and 75. And I went for a nice 3.5 mile run. Came back, had some lasagna. That's why I started the live stream late. But no, nicotine. I like being Aunt Midney Sweeney. She's a goddess. Don't you dare insult her. In your opinion, why are people not struggling? Chipotle always packed. Chipotle's having issues. Airport lounge is busy and earning strong. It's called credit. It's called credit. People are borrowing. The American savings rate is abysmal. It is a disaster. Americans borrow, they live large. Americans are very boom and bust. What in bad times, Americans, they lose a lot. And basically the government comes and bails them out. During good times, they kind of live in the present. They don't think in the future like, oh, maybe the good times won't last forever. They don't think like that. They think, oh, times are good now, and I'm going to extrapolate good times forever into the future. Kind of like how people use past performance for future performance. And they basically spend everything they can. They don't save anything because of nonstop corporate propaganda aided by big tech. And they live lives of poverty and servitude. They're slaves. Most Americans are slaves. They don't even understand it, but their brains are so cooked by corporate propaganda that they're addicted to spending everything they make. They have to do it. They have to. It's like, I must spend all my money. I am an American, be broke, but I'm actually winning because people think I'm rich, but I'm really not. That's the American way. I'm the exact opposite. Like, times are good now. I mean, the stock market's been roaring. Everything's great. What could possibly grow? Corporate profits are growing into infinity. We got a pro-business president. What could possibly go wrong? I'm going to live large, bro. I'm going to buy a new house. I'm Jeremy. Not because if the bubble pops and anything's possible, you're cooked. So when times are good, you should prepare for when times could get bad. I'm not saying live like a pauper, but you should always be consistently saving. Always. Never stop saving and being smart with your money, and don't get sucked into the go-go years, which happens to a lot of people because they don't think long run. They're bugs. They're insects. Times are good. Spend all my money. But it's the future, bro. Okay. I'm only doing member comments. You want me to do your comments? Pay me. I miss Jay Nagy. I'm going to get him back on here. Don't worry. Can you kick Happy Sack from your server? He goes on old codger demented rants and clogs the general chat. Many years of block. No, you got to be pretty extreme to get blocked, man. You got to be pretty extreme in the Discord. USA savings rate is only 4.5%. Oh, let's go look at that real quick. I know this stream's dragging on, but whatever. We got to make fun of Stockmo in the next stream. U.S. savings rate. Fred? You want to see how stupid Americans are? God, it's like, all you have to do is save. It's really not that freaking hard. Okay. This is the U.S. savings rate. Trust me, everybody's rich, bro. No, they're not. They're poor. All right, so before the clown market, the savings rate was, hovering around 5, 6, 7, right? And then we have the clowndemic and the savings rate vertical lines because everybody's getting government support and they're trying to survive because they can't work. And then, of course, as soon as the clowndemic ends, the savings rate hits an all-time low in Q2 of 2022 of 2.2%. So Americans, they swing. They go from excessive savings to massive depletion of savings. And that bottomed out in Q2 of 2022 at a 2.2% savings rate. And the highest it's been since the popping of the clown market was 5.4%. Now the savings rate's at 4.7% as of Q2 2025. That's nothing. Mine's always been like 25, 30% my entire life. And it's worked out for me. And now I am free almost. Bro, but look at my car, bro. I'm so rich, bro. Only met 4 Americans in my lifetime. They all had 10 credit. Yeah, Americans are idiots. There's so much to love about America. Never stop nicking. Oh, I'm addicted. Hans, I am not Gil. Spending money on membership just to hide. The issue is Happy Sack just rambles, adds nothing. Even Fresh, he hates him. Well, if Kid Fresh, he hates him, then oh, man. Do you think interest rates will come down soon? I want to buy it. I don't know, dude. That's all about inflation, man. I mean, if inflation keeps going and the economy keeps roaring, they might not come down. I mean, the Fed can cut, but as we've seen, the Fed can cut, but long-term yields can go up. So I don't really know. Oh, we got Happy Set. I'm not going to ban you, buddy. Don't worry. It's okay. You need to really be a clown to get banned. Anyway, thank you for tuning in. The next video, we're going to cover Stockmo and Dividend Dude. Stay tuned. Thank you for tuning in. I forgot to post all my grifts, but if you see the pinned comment, let me pull it up real quick. Hold on. We're pulling up my grifts.
Well, you're a grifter. You're a CPA that does people's taxes. That's a grift. You need to be more like me, Kevin, and do house hack. Yeah. AI.
All right, hold on. Hold on, we're pulling up my grifts. I'm dragging this stream out. I got nothing to do. I'm a loser. Got a Chris Sane video here. That's cute. Come on. I pay almost $70 for this internet. It's freaking slow. All right. Come on. All right, let's do this. All right. Here's all the grifts. And I'm going to show the Discord too. All right, you ready for the grifts? Here we go. So if you click the pinned comment, you get this. You can do bookkeeping. I have a whole presentation. I'm a CPA. I can do bookkeeping. Tax preparation. I do taxes, business or personal, any state in the United States. I do sponsored videos, $50 a pop. You click this link, you send me $50. Payments, all the information's in there, and I'll do a video about whatever you want. I do one-on-one consulting. You want to talk to me about anything, your life issues, how to make your pee-pee feel good, whatever you want to talk about. $75 an hour. I should probably raise that. I got a book, Stop Being a Broke Loser, on Amazon, and there's a free Discord. So if you click the link in the pinned comment and at the free Discord, you can join the Discord for free and have all the fun you want. Anyway, thank you for tuning in. Stay tuned for the next video. We're going to cover Stockmo and Dividend Dude. And have a wonderful, delicious day.